Morning, folks. Morning, traders. It's a interesting Monday already. Brexit news looks like talks have fallen over because of political discussions and the backdrop of the Irish border backstop. It's a difficult and fraught situation, but there we have it. And sterling's down about 0.4%. We've also had some pushback from the Saudis, really aggressive pushback, actually. Against potential sanctions coming from America. They have implicitly threatened to stop pumping oil and to drive oil prices up to $200. They've been all over the shop. Mohammed bin Salman, the Crown Prince, has clearly overreached. You know, he's probably thought, it's Saudi territory, we can do what we want, it's a Saudi citizen. But he hasn't thought about the fact that this fellow, Jamal Khashoggi, has been staying and living in America. And so many American politicians see him as part of their constituency. And even as Donald Trump said on the weekend, you might find it, he said, words to the effect of, you might find it strange that I'm defending a journalist, but we need to get to the bottom of this. And so whether it's Trump or whether it's Congress, it does look like some sanctions are coming for the Saudis. So those two things have derailed what was going to be a pretty, sort of straightforward chat about levels holding and those kind of things. So oil's opened up higher, as you'd expect, 72.39 on my charts from about 71.34. If the Saudis are serious, then the way the charts looked on the weekend, 70.50 for WTI, for example, was really important. If that holds, I beg your pardon, we could see a decent rally because, of what the Saudis are threatening. Just quickly around the grounds, Europe completely missed the rally. It was a pretty volatile kind of move for US stocks Friday, but Europe completely missed the rally. The DAX was down, the CAC was down. The FTSE managed to rally, but in the US, we saw the S&P up 1.4 and the NASDAQ up 2.7. In Australia, the SPY was down, sort of 50-odd points. Pretty poor performance there, even though miners and metal were being bought. As we opened this morning, US dollar's a little bit stronger. Aussie's down a tiny bit at 71.08. Kiwis are just under 65 cents. As I said, sterling is now under 131 and euros at 115.47. Gold broke up last week, really important break. Fell a little bit on Friday back towards the previous resistance level, but we'll see how that goes. Copper looked good too. Let's start off with the S&P 500. Now, this is the futures-based CFD. I've on purpose or purposefully left all of these different lines in. What we've got is this is the old channel that goes all the way back to 2008, 2009. This is the channel that it's been in for the last little while, which is broken down. This channel here is the post-Trump low, I'm pretty sure. And then this channel is from 2015, I should say, when we had that Chinese devaluation, those kind of things. What does it tell me? It tells me if I just look at the MACD, look at this. We've made a lower low on the MACD. And I know that a lot of people don't use MACDs like this, but, MACD is, for me, that's my tool. Trendlines and MACDs, they're my tools. The ones that I use, the ones that I know intimately. And the good thing about MT4 MACD for a visual guy like me is that the way that they put together this MACD works much better for me than it does on other places where they have the lines. Anyway, what have we got? If you've been reading, watching my videos for a while, you'll know that this tells me that overall the prices are still going down. I'm targeting, as I said in my weekly update, so this thing, I'm licensed as of today, folks. So in the next little while, I'll be coming with an offer to market. This thing, 30 odd markets that I'm looking at, plus correlations and all that kind of stuff. Last week, it enabled me to say that the risk is growing of a market funk. And we saw that last week. But what I've said here for this S&P 500 is I'm targeting 25.36. in the medium term. That's the level where it's just a 38.2% retracement of the last and recent downtrend. Any rallies are selling opportunities for me. Just quickly, we'll go around. I've moved everything this morning, so I don't know exactly where all my charts are, so please bear with me. The DAX still looks terrible. It's at 11.5, so it's closed under 11.7, which is, for me, really important. I'm targeting 11,000, then I'm targeting 10,000 for the DAX. On a medium-term type of basis. In terms of the local market here in Australia, completely missed. Like, look at that chart. That's awful. So you've got a target down here, I guess, which is about 50, just under 5,700. What have we got? We've got the low there, 56.79. So that's about the target. That'll be a full round trip. You know, you look at it on the weeklies there, and that period up here at 6,345, and then this period here, that stalled, big fall, more stalls, big fall. You know, perhaps we go sideways for a bit between here and that level, but the MACD suggests some further weakness to come. This Saudi stuff, if let's just say oil, WTI, is back up at 76, 78, 80 bucks again. You know, we really could have a completely different outlook for the global economy and for stocks, even though what I thought, what we saw in the credit data, particularly from Citi and JP Morgan, was a reasonably robust US economy. Perhaps that's the story. Perhaps interest rates won't run to the rescue this time around. Euro, we'll move over to Euro. So this is our weekly Euro. Realistically, you've just got to draw a box around it. 113 to 118.50. It's ratcheting up and down. 114.30, which was last week's low, is actually a weekly and monthly trend line that goes back quite a ways. So that was the level it pulled up at last week. 114.30 remains an important level. If it was to go down and through 114.30, then I would expect 113. And if 113 gives way, then I'm looking for 108 on a purely technical point of view. If, as Michel Barnier said, the EU and Britain are not at a deal yet, there is some downside pressure because they definitely both have benefited over the last couple of weeks, few weeks in fact, from that. Now, speaking of Brexit and the sterling, if we have a look at, that's the weekly, I just want to show you the daily. That's bearish engulfing, folks. That is a bearish engulfing Friday for sterling. So even if you just looked at that on its own, sterling was going to be under pressure. If I blow this up a little bit, you can see what I'm working off when I talk about the weekly uptrend. So I've been using, this is the third, that was the third touch. So the level to watch here is about 130. Obviously, we're 100 points away, but about 130.30, I should say. And if 130.30 breaks, then you've got it down at sort of 129.20, something like that. That'd be about mid-range. It's been sort of 126.60 to 132.90 something. So that'd be about mid-range, which is probably about fair given the uncertainty around Brexit. Lots of water to flow under that Brexit bridge, of course, but you know, it is getting messy now. This is the weekly Aussie. So we've got an uptrend within a downtrend. As we open this week, we're going to be a little bit below where we were on the close on Friday. How it plays out, not exactly sure. The Aussie did well last week. I was chatting on Twitter with a fellow, and he made a point about the Aussie and the way that it reacted. And in the conversation with him, it dawned on me that one of the reasons, potentially, that the Aussie didn't get flogged last week when markets went into a funk was that because there's no yield pickup with the Aussie, then, and because obviously markets are already short, but because there's no yield pickup, there's no off-index bets that need to be cleared out. When Australian rates are above US rates, well then you get a dollar block bond investment at a pickup to the US dollar. And so what happens is you can get a little bit of carry in your bond portfolio from owning Aussie. You know, you might your Aussie index might be, you know, 1, 2, 3, 4. I don't even know how many percent it is, but let's say you put a few extra percent in, gives you an extra incremental return. But if markets go to heck and if US rates start rallying, that's where you want to be because the money's going to go to the dollar, so you get out of Aussie. But if you're not already long Aussie because there's no pickup, well then there's nothing to sell. So that's a really interesting dynamic to think about when it comes to just risk off, sell the Aussie. And the market is short, as the CFTC data showed. I've looked at the CFTC data, the Citibank Economic Surprise Index data, plus the Saudis, plus the POMs, plus Brexit, plus lots and lots and lots of things in markets morning today. So much that I still had lots that I could have put in. It could have been twice as long. Anyway, so the Aussie's having a rally within the downtrend, or at least it did last week, but the downtrend is still dominant. So that's the key thing to think about when you're trading Aussie from my point of view. This is the most interesting currency on the planet for me right at the moment. Dollar CAD, downtrend. Aussie, downtrend. Dollar CAD, downtrend. Square that circle. NAFTA, fixed. Dollar CAD, downtrend. But it's trading very nicely, isn't it? and it is trading very nicely. And so we're just trading, pardon me, within this overall downtrend. Topside parameters, and if the dollar's going to get a little bit stronger on the back of euro and sterling, 131.20. 30 is resistance, and perhaps we'll go up and have a test of there. In terms of the Kiwi, a bit like the Aussie, a counter trend rally for the Kiwi. You could easily, don't know where my little channel's gone, but let's just have a crack at that. Let's just give it those two, make it nice and simple. It's only 2 touches. Obviously it's going to be this one, yeah, it's still in a downtrend, although trying to show some signs of life, but the downtrend persists for the Antipodean currencies at the moment. Now gold ex-AUDUSD is gold again, as I wrote a couple of times. The weekly and daily systems that I used with just a MACD, both are long of bugger. Sorry. Both are long of gold at the moment. You get what we've broken out, and then we've got this little support. Now, see where that 200-day moving average is, 1234. That's $4 in front of the 38.2% retracement of this fall, which is 1238. Then 1240 is a level I've been talking about for a long time. That low over there was 1236. So this sort of 1234 to 1240 region is going to be significant resistance for gold. If gold can get up and through there, that would speak to a very ugly world, and I'm sure dollar yen will be down at 109 or something like that. But you've got the MACD. You're starting to get a little bit overcooked, but if we can, last week's high was 1226. Obviously, if we get to 1226, then we run the extra sort of $8 or $10. Could we come back and retest the breakout? Absolutely, we could. It could fall to sort of 1209, 1210. And still be broken out. Theoretically, it could fall all the way back down to 1190 and still be broken out because of this little uptrend here. But keep an eye on gold. This is exactly, as I've written in today's Markets Morning, this is exactly the sort of environment where gold breaks out. Stocks going off at the Saudis causing merry hell in the oil markets, potentially. All this uncertainty. We'll keep an eye on that. China. Graham Allison's written a great article about China, which I've linked in Markets Morning, just on the Thucydides complex, which I know a lot of you have heard me talk about. If I looked at it on the dailies, you'd just say that copper's in a bit of a range. It did extend further than I thought last week. Remember I said 73.80, but then it got below 73.80. I think the low was 71 something, 71.15. And so, we've had a sell-off, a spike, and now it's waiting. If you look at it on the weeklies and use the MACD, then you've got to suggest that there's potential for copper to run higher. Difficult in the current circumstance. If gold's looking good, then why should copper? But the bullish case for copper comes from the fundamentals, not just from the technicals. So copper, as a financialized risk asset, if I could call it that, like the Aussie, got sold down because people were worried about the trade war, people were worried about the sell-off in or the weakness in potential global growth and all that kind of stuff. That is still in train. And we heard from the Chinese over the weekend that they're doing their best to re-stimulate the economy, but that the currency is a bit of an issue for them. They're going to effectively what I read was that they're not going to destabilize the renminbi, but they are going to let market forces kick it higher. So if you think about this, remember that's where that little range top was, nice little wedge there. If we get up and through that high, then we're on our way to 698, 6.7, I should say, 698 to 7, and then things get really funky. Now, normally, as I've said often, you would, a vertical move like that would be reversed. And so if it holds below 7, then at some point you could expect to see it back in the 680s, maybe even the 670s. But for the moment, it's got some upward momentum once again, and the Chinese aren't going to discourage that, I wouldn't think. If we have a look at WTI and Brent this morning, if I can find them, there's WTI. So, just a nice, easy, it's still in a nice, easy uptrend. If you draw that on my weekend scan, different charts obviously, you could effectively say that it's held and held support. That's what I wrote. 70.50 for me is the key. We're now at 72.40. That's a buck higher than where it was. About $1.25, I should say, above the close. So on that basis, this line is holding. We'll have to see how it goes at the top. Not a lot of momentum in the slightly overbought area when it comes to stochastics, but this is all about Mohammed bin Salman. This is all about Saudi Arabia. And even though we've had 12 million barrels worth of build in inventories in the US, even though OPEC is a little bit worried about inventories building next year, which is what Mohammed Bakinder has told us, this is geopolitics, and it's hard to know how geopolitics is going to play out. The way I'm playing it, unless or until 70.50 breaks, then there's every chance that we see a bigger bounce. And you can see here again, obviously we've had a long tail, which is a good signal for a reversal. We've pulled up at support. Now, while that support holds around 80.20, I would expect it's at 81.69 now on Reuters for Brent. So that's continuing to rally. We've looked at most of the stocks, and if I can find my Bitcoin chart, I'll finish off with that because it's already been 16 minutes. Right, so Bitcoin bouncing along the bottom. You can draw your triangle in there. It should be looking to bounce higher. If 56.50 to 57.50 was to give way, then I'm looking for sort of 29.16 or thereabouts. Sorry, 29.66, and then maybe even 18.50. Ultimately, I've seen some numbers when I look at my charts of 348 and those kind of things. Anyway, we'll see. It's got to break down through that level. Now, that's it from me. Interesting start to the week. Retail sales in the States is out tonight, so that could be a big one. That's for September. We've also got business inventories for August. They will be interesting as well. Otherwise, it's fairly quiet. We've got unemployment here in Australia on Thursday, which is a big number. But Saudis, Brexit, price action for stocks. What do the bonds do? I didn't mention them. 314 according to my Reuters this morning. Keep your eye on those key drivers because they will trump the data. But if retail sales are weak tonight, could be really interesting. Anyway, and also watch earnings and watch what the conference calls say. Although in this current market mood, and don't worry about all the people. I know I'm gibbering on here, but don't worry about all the people who are looking for the fundamental reason for last week's move. There's a whole bunch of different reasons. Have a look at Jim Edwards' article. If you haven't read it on the 11 causes of the market funk last week, ping me on Twitter and I'll share it. In fact, I'll share it again. Anyway, bye for now. Have a great day. I'll be back tomorrow.